Welcome back to Making Money Matter, ladies and gentlemen. I am absolutely delighted today to bring you Dr. Marc Faber. He is the editor and publisher of the Gloom Boom and Doom Report.
Correct.
And that you can find that at www.gloomboomdoom.com. So make sure you go and check that out. Now, the last time I spoke with Marc was some 7 months ago on another channel. So this is the first time he's come on to Making Money Matter, and I'm delighted because what Marc doesn't know about the economy, but also he's very forthright with his views, and I find him fascinating in terms of how he understands not just what's going on, but within our region, but also globally. So Marc, great to see you. Thank you for your time. Before we get started on the big overview and also a deep dive, just perhaps a little bit of background about the report and why also you called it Gloom Boom Doom.
Well, thank you for having me on your show, and welcome to all the viewers. The report is called Gloom Boom and Doom because whatever happens in asset markets, something will always go up. Even if everything is bad, say if currencies go down, then something goes up against currencies, say gold or silver or platinum or bitcoins. And if stocks go down, it can be that bonds rally. And if bonds decline, it can be that inflationary stocks rally. In other words, the inflation plays and so forth. So the markets are never entirely in sync. In other words, some countries can move up in price while others decline. Some industries can rally. I mean, if we look at the market in 2023, the striking feature is how strong the FANG and FANG-related stocks were. They call them sometimes the Magnificent Seven. And there were some markets that were strong, like Argentina is up more than 100%. Iraq is up 90% and so forth. So whenever things are perceived to be bad, there are also other opportunities that arise. And so the report is called Gloom, Boom, and Doom because this gloom and this boom and this whatever. So that's the reason.
It's the cycles, I guess. And right now, we're in a cycle, an inflationary cycle. And you once said, and I think I quote this correctly, inflation is like toothpaste. It's easy to squeeze it out, but much harder to bring it in. So your views at the moment, I mean, is inflation here to stay? Should we be worried?
Yes, the answer is not so simple because we had inflation, a strong bout of inflation, 2020 to 2022. In 2023, we still had price increases, but at the diminishing rate. In other words, we have so-called disinflation. But I want to make one thing very clear. Say between 2020 and 2022, prices went up by 30%. So even if they declined overall by 5%, which is by far not certain, but even if they declined by 5%, we would still be up 25% vis-a-vis, say, 2020. And a second point I want to make is I lived through the 1970s, and I actually worked in the 70s. I started to work on Wall Street in 1970, and I saw the rise of inflation until 74, and then we had a period of disinflation and of interest rates coming down into 1976. And then we had a second bout of inflation into like 78, and then again a retreating inflation rate But the final inflation rate was between 79 and 1980, 81, when inflation really got into a very high level, and interest rates, which had been at 6% in 1970 on the 10 years US Treasury, then reached over 15% in September 1981. So what I want to say is we could have a year or even 2 years where the rate of inflation doesn't look like threatening anymore, and suddenly it starts again to go up. And this is my kind of feeling from observing markets when I travel and when I'm here in Thailand. There's a lot of pent-up kind of price increases that haven't happened yet,
Wow.
but they're about to happen.
Wow. What's causing that pent-up potential for price increase? And is that across the board? Are you seeing that across everything, or is it just certain sectors?
Well, I think this is a very good question because, as you know, we have had almost an unprecedented increase in interest rates within a short period of time.
Yeah.
We were next to zero interest rates until like May 2020. And now we're up to like 5% Fed fund rate at a rapid pace. But as economists have pointed out, the level of interest rates does not tell you whether money is tight or not.
Oh.
And there I have to say, I've written about this for the last few months. Everybody says the Fed has tightened.
Yeah.
Because everybody talks the same way and they don't think.
Yeah.
Especially not portfolio managers.
But, we could have some fun with that, Marc.
But the reality is, if money was tight, many things would happen, including you would have yield spreads. In other words, the yield of junk bonds vis-a-vis, say, quality bonds, treasuries, widening substantially. If money was tight, stocks would tumble and not rally. If money was tight, Bitcoin and gold would be going down and not up. So there is no evidence that money has really tightened. Now, if you turn around and say to me, Marc, but for some borrowers, they can hardly get any credit.
Yeah,
I agree.
Yeah,
These are lower quality borrowers. They have no earnings. 30% of the Russell 2000 index stocks, they have no earnings. So they have now difficulties in getting money and borrowing money. But quality companies have no problem with getting money. And I'd like to also add one factor here. You know, everybody says the tightening and the rise in interest rate is a disaster, but not for me. You know, I have a lot of cash always because of the nature of my business. And until 2.5 years ago, on my cash, I didn't get any interest or hardly any interest. We were placing money on deposit for less than 0.5%.
Yeah.
Now I just placed money for 9 months and 12 months at between 5 and 6% interest. Now, I'm not suggesting that there is no risk in having deposits with the banking system, but under normal circumstances, I should get paid back under normal circumstances. And so compared, say, if I have $10 million on deposit before, I got 0.5%, so it's 50,000 US. Now at 5% is 500,000 US. So my liquidity position And I hate to say it because I think the Fed policies have hurt ordinary people meaningfully over the last 15, 20 years and have enriched pigs like myself who are kind of dabbling around financial markets. It's very unfair.
Yeah.
The system has been very unfair. And as an economist, I reject that. As a private citizen, I say my life today is better than it was, say, 3 years ago when I didn't get any interest on my money.
But you said just then you 9 months and 12 months at 5%. But if inflation's running higher than that, aren't you going backwards? It doesn't matter what, let's not worry about the numbers, but aren't you better off looking at things that could give you a better return? That's what I'm just saying. Or do you like the liquidity of it?
Well, we have to decide whether there are other things that will give us more than 5% per annum. I'm a financial advisor.
Yeah.
I see hundreds of clients. I see hundreds of portfolios. I tell you, the last 20 years has been a disaster for individual investors.
Yeah.
Don't believe that individual investors make the averages, that they participate in the index. No, they buy sectors at a high price. When it's fully priced, they bought the SPACs before they tumbled by 90%. They bought the meme stocks before they tumbled by 80%. And they bought the Capricorn before they tumbled.
So right now, we're looking at what people should be doing. And there's a lot of confusion here in Australia. And I think globally, there's a lot of confusion. There's a lot of uncertainty. We've got wars, we've got inflation, we've got all sorts of things. So what's your view, Marc? Are you looking at diversification? Because you just talked about a lot of losses that people have had. And I think once you said, how do I lose the least money?
Correct.
So
correct.
So are you saying cash is king in these times?
Well, no, I don't think so. I don't think that cash is king. And as I said, I think there's a risk in owning all your assets in cash. Because what you pointed out, that if inflation is above 5%, then money on deposit is a loss proposition. If it's at 5%. But to this subject, I just want to point out something which I think is important, and I think many people have overlooked. The government says the economy is expanding. In my view, this is nonsense, because most people, and I'm not referring here to the 0.1% of wealth owners that are the wealthiest people in the world that actually benefit from inflation. I'm referring here to ordinary people who are in Australia, the US, and elsewhere. They get a salary.
Yeah.
And the salary goes up by, say, 5%. But their cost of living goes up by 10%.
Yeah.
So inflation adjusted, in real terms, their income is going down. And as a result of this real income going down, the standard of living of these people is going down.
It's terrible.
And we have statistics in the US published by the Federal Reserve that clearly indicate that this generation, the young people today, they will earn less than their parents did and have less assets than their parents had. This is the first generation in the history of capitalism, which is, say, 200 years old, that will be worse off than the previous generation. But the governments, all of them are liars. They have to lie to the public to stay in office. Otherwise, they'd be a revolution if people knew the truth. The people that are in governments, they will tell their people, oh, GDP is growing and the economy is strong. Nonsense. It's complete nonsense. Ask ordinary people. Of course, the TV never interviews ordinary people because the ordinary people would know the truth. They always interview some useless fund manager.
Yeah, well, we don't. We could do a whole interview on that one, Marc. But I can sense your almost. It's a passion, but it's an anger about what is happening. And we've spoken in the past about social unrest, Marc, and we've spoken about the fact that there is this widening gap between, as you just said a moment ago, the 0.1%, if you like, the elites, and then the rest of the population. If this is the case, are we going to see social unrest, or do you think that people have forgotten how to think and how to ask the right questions? And are they put into a fearful mode where they just accept what's happening?
Well, we're not going to see. We are seeing social unrest in many countries.
Okay.
Especially in Europe, but also in the US. This is a factor that I would consider when investing money. That's why I'm suggesting to people they should diversify.
Okay.
But I think that the current climate, socially in democracies, is poor. Secondly, geopolitically, the climate is very bad. I mean, we're on the verge of wars.
Yeah.
And under normal circumstances, if you had leaders who had common sense, these wars would not occur. But we have these useless bureaucrats, most of whom have never worked in a private sector job. They went to university and they study politics.
Yeah.
These are people, they are born
to
be communists, socialists, and with twisted minds. They have no practical view of how a system works. And I mean, I'm kind of interested in history, and I've read the Roman history now for the third time. I need to read it another time, the fourth time, because by the time I'm at the end of the history, I forgot the beginning. Yes, I mean, it lasted a long time from 50 BC to say 500 AD. So it's a long time, and there were many emperors, and some were very good and some were horrible. So there is hope for our Western democracies. But the problem, once you have a bad bureaucracy, they keep on electing bad people.
Yeah.
You understand?
Yeah.
And so I'm kind of very concerned about that. Number two, you started out the interview about the inflation cycle.
Yep.
And I have to say, we had a disinflationary cycle, say 1981 to 2020.
Oh,
okay. So we have essentially more than 40 years of disinflation and of falling interest rates. In my opinion, we are now in an inflationary cycle where the rate of inflation will go up and where interest rates, yes, from time to time, they'll go down for 6 months or 9 months, but in the long run, they'll go up. And I was just talking to someone from Turkey. I mean, in Turkey, you have interest rates of 100% and inflation around 100%, and everything functions. It's difficult to believe, but you can have systems with very high inflation where if you walk around Istanbul, you wouldn't notice it. You don't notice.
Why? How?
Because the system is adjusted to that. The corporations increase prices, wages go up, taxes go up, and so forth. So it goes on. It's a very bizarre way of thinking. But the fact is the Turkish economy is doing quite well. It's hard to believe.
So that to me means that currency, because I don't like to call it money, currency is like monopoly money. It doesn't matter what the numbers are, it just keeps going up and away.
Well, I think, yes, I think paper money loses its purchasing power over time.
Yeah.
In some sovereign states at a faster rate than in others, but over time they all lose money. I mean, their purchasing power, because inflation is a tax. Say you have a government and the government wants to spend money, but in order to spend that money, they would have to increase taxation. Then everybody, the citizens, are angry at rising taxes. There's only one tax that people like. It's the tax on your neighbor. The neighbor who lives next to you. You like that he pays that tax.
Well,
but otherwise, to increase taxation is frequently not an option politically. Let's say, if I want to get elected, I go to the people and say, yes, look, we have to do this and that and so forth, and we have to increase taxation. For sure, I will not be elected. For sure.
Yeah.
That's why, although I say that politicians, all of them lie, the public is also partly responsible for these lies, because they will not vote for someone who tells them the truth.
Are there people out there that are telling the truth? I mean, I know you are, but you're not going to go into politics anytime soon, Dr. Faber. I can pretty much guarantee that.
Well, I don't think I have much chances to get elected to any office. But I'm an optimist, so maybe in a later stage of my life.
If the currencies are going down, if diversification is something that you're looking at, if inflation is sticky, what do you think what does that diversification look like? What do you think people should be doing?
Well, that is a good question, because as you know, we have many markets in the world.
Yeah.
The largest market by market capitalization is the US. It's more than 50% of global stock market capitalization. The last time one country had 50% stock market capitalization as a percent of global stock market capitalization was Japan in 1989.
Oh.
Now Japan is down to about 5%. So while the Japanese market didn't perform well, other markets went up. And so we could have a US stock market that goes down and other markets go up. As you know, emerging markets and value stocks have performed very poorly in the last few years relative to the US. And so, as an example, in 2022, Turkey, the stock market went up by more than 100% in US dollars.
Wow. Okay.
Because it became very depressed as a result of the inflation I discussed before. This year, in 2023, Argentina, also inflation over 100%,
yes,
is up more than 100%.
Yep.
Is up more than 100%. And Iraq is up 90%. So you have these, and also some sectors have done well. The green communists, they always try to shoot down coal. Some of the best performing stocks over the last 2 years are coal stocks.
Absolutely. Yep.
Because that's the problem with the green communists. They have no idea about economics. They don't know that you can produce electricity with coal. And they don't like to produce it with uranium, with nuclear power.
Oh, yeah.
So they keep on producing it with oil and gas.
Well, going back to the diversification theme.
Yes. So, like, I mean, I've been labeled as Dr. Doom in Hong Kong because I was bearish about Hong Kong. I actually wrote the book, The Rise and the Fall of Cities, in 1997. Because, as you know, in history, some cities have risen to incredible power.
Yeah.
Like Cartagena and like Venice. And then they moved to the side. They did not vanish entirely. But in the case of Carthage, they essentially vanished because the Romans destroyed them in the course of the Third Punic War. But the point is, now in Hong Kong, property stocks are selling in many cases at, say, 30% of book value. Now, I think the property price can go down, but some property companies, they are family-owned to a large extent, and they have no debts. It's very interesting because the families are very conservative.
Right.
So I think there is a value opportunity there. I also think that Pakistan is cheap and could move up. And in Latin America, I just mentioned Argentina, that had shot up a lot. Now I think Colombia is very cheap.
Oh.
The stock. So you see, it's like real estate. Some real estate is expensive, but some real estate in the countryside is not expensive.
Yeah, you're talking to someone from Australia where the property market just keeps getting more and more expensive for those that don't have real assets, and this inflation thematic is playing out in the property market down here in Australia. But I think there's more to it than that because of our immigration as well.
Yes, correct. And also it is, I mean, it splits society because your parents, if they own a property, they have an appreciating asset, but maybe your friends' parents are renting a property and every year they have to pay a higher rent. So they're being hurt.
Yeah.
So this is what I'm suggesting. When you print money, you divide society, and the money printing touches different members of society very differently. And I mean, I can laugh about it because I have assets and so forth. But as an economist and as a social observer, I'm disgusted by the central bankers.
Yeah.
They knowingly have destroyed the middle class. They must know that inflation hurts the less affluent classes. They must know that.
Must know it.
And yet they do it.
And they continue to do it. And so
Correct. They continue to do it.
So, Marc, is it just going to continue to divide society? Are we just going to see this continue to play out? I want to know if you see if there's going to be any sort of reset. You mentioned the US economy is strong. You talked about some of the emerging economies like Pakistan. But I guess what I'm asking is, are we going to keep going down the same divided route with the haves and the have-nots during our lifetime, or can you see something that's going to smash this apart? And I love the
You're looking at me when you say our lifetime. Maybe my lifetime is not so long any longer. But the point I want to make, I don't think the US economy is strong.
Oh.
No, I pointed out that in real terms, on paper, it looks strong in nominal terms.
Yeah.
But in real terms, it's not strong.
Why is that?
Well, when you print money,
yep,
everything is distorted and hidden. So the reality doesn't show up when you print money immediately. But people have, in real terms, inflation adjusted, declining incomes. Their income is going up less than the cost of living.
Right. That makes sense.
But not only in the US, in Germany, even more so. The more to the left the governments are, the more the purchasing power of money goes down, and the less spending power people have.
There's a wealth effect and a wealth lag effect. I want to come back
Correct.
to Argentina, if we could. Recent election has shown that Javier Milei has been elected, and he's talking about getting rid of the central bank.
He's not going to do that.
Okay.
Never. That I'm prepared to make a bet of any amount. He's not going to get rid of the central bank, because the central bank controls him, not vis-a-vis.
Wow. You said central banks continue to print money. Central banks are, if you like, at the center of all this. How powerful are they? Because central banks didn't exist before, when was it? The early 1913 or something? What's the
Yes, to say in America, the Federal Reserve came into
1913.
existence in 1913.
Yeah.
In the 19th century, we didn't have central banks, and economic growth in America was much stronger than in the 20th century when we had a central bank. This is the reality. You can grow much faster without a central bank.
So why do we have them? And how do we get, you know what, Marc, how do we get rid of them? If you say we could grow better without them.
I don't want to get into the subject of why we have them, but I can say with great conviction that we don't have central banks to enrich ordinary people on the street. Let's put it this way, and very crystal clear, and I repeat it. The central banks were not created to enrich ordinary people. They were created to enrich an elite class of people. And the rest you can look up in the dictionary and in all kinds of books.
Yep.
And then people will accuse you of conspiracy theories and whatnot. The usual story. But the reality is simply that whenever you have a central bank somewhere, eventually the money will lose its purchasing power, inevitably.
So if money is losing purchasing power, are you suggesting people need to get away from currency, money, and go into things like real assets such as property or gold or silver? We haven't touched on gold yet, and I do want to cover that.
Well, as I said, I think in America, we have statistics about everything. Most of them, they don't make much sense. But one statistic shows that property prices are very inexpensive compared to the S&P 500. In other words, the best performing assets were financial assets. They're up in the sky.
Yeah.
Compared to up in the sky of financial assets, real assets, including precious metals, commodities, and real estate and collectibles, compared to financial assets, real assets are relatively low. So I would have in the program of my diversification, I would have some real estate. But I just want to point out, we talked very briefly and on the side about civil wars and domestic unrest and tensions, social tensions, and about geopolitics. To this subject, I want to say there's a security aspect. If you want to be safe, you should live in a small village close to a river, but not next to a bridge. And you have to live low key. Don't arrive with your helicopter and with your Rolls Royce. You have to integrate into the local population and then disappear, give up Facebook and all this nonsense. And so that is a relatively safe way. In case of disturbances, the most vulnerable part are cities where the government or someone else can switch off the electricity. What are you going to do to pay your bill in the grocery store if you have no electricity and no internet? Finito. The only way to pay at that time is with cash money, if it's accepted, and with gold in small denominations, like 1 or 2 grams. And then in these situations of emergencies, like in prisoner of war camps, cigarettes become money.
Yeah.
So would you like to have one?
Oh, Mark, I love your irreverence. It's fantastic. The majority of people watching, though, Mark, would turn around and say, oh, it's never going to get to that. Or even if they believe it might get to that, they're not going to do it. Maybe they're entrenched in the city because they've got a young family that are going to school and they've got whatever it is, they're going to be where they are. You were going to say.
Yes, but it's a risk.
It's a risk.
I mean, I also lived in Hong Kong for 30 years, and you live in a city. Of course, you're on the sea, so you could escape in a boat, but you need a fairly strong boat to escape from Hong Kong. But I'm suggesting, if you think about diversification, you should also think about risk. You understand?
Yes.
There's also, if you own in a bank, you have a portfolio in a bank, and you tell the bank, look, buy me some gold or buy me some gold shares. It's in an account with the bank. This is a certain risk, because bankers are not trustworthy. Who used to be a banker for a long time. So I know that. So, but if you have your gold physically in your ground around you, but you're not supposed to tell anyone where it is. Of course not. It's relatively safe for you.
Yeah.
And so everything, when you look at investments, my grandmother always said, you know, you have to save 10% of your income and put it in the bank because the bank is safe. No, it used to be safe, but nowadays it's no longer safe.
And we saw that with the collapse of a number of banks in the US.
Yes,
do you think that
correct.
will continue?
And it will continue, yes, for sure. But in the meantime, I have to say, and you know, a lot of people were surprised by the recent rally from the October lows up to now. But in October, sentiment became very negative, and the put-call ratio was very high. And traditionally, in the third presidential year in the US, between October and December 27th, 28th, there's a strong rally, a seasonal pattern. These seasonal patterns do happen.
Okay.
Don't ask me why.
Yeah.
But they just happen. It's like some months are strong in the stock market and other months are less strong. And so my view was that there would be a rally and that you shouldn't short the market. And a lot of people lost a lot of money by being short treasuries and being short the stock market. And then the stock market rallied and the treasury market rallied. And now people have been short the yen. And what happened? The yen strengthened, especially tonight.
Yeah. Okay. Interesting. What's causing that?
Well, the Japanese will have to address the zero interest rate policy, and they will have to probably increase interest rates because they also have some inflationary pressures, partly because the yen has collapsed. So I think we could have some yen strength in the next few months. But, you know, if you look at all these markets, the one thing that is striking is the extreme volatility in everything. You know, some stocks, sometimes a stock goes down 10% in 2 days. The next 3 days, it goes up 15%. Sometimes a stock breaks out on the upside and collapses the next day. So the environment, in my view, is not very favorable for investments in financial assets. But we have to, of course, keep on investing, because to have all your money in cash is a huge risk. Depends on with whom you keep the cash. And I believe that central banks, if we analyze clearly the financial position of governments, they have unfunded liabilities, okay?
Yeah.
They have fiscal deficits. And the pension funds have unfunded liabilities. And the asset markets are high. Do you think that Australia could afford if property prices dropped 50%? No. So the central banks have put them in a position themselves where they have to print money. They may say they don't do it. They will keep on lying. They can say, we increased interest rates. Yes, they can increase interest rates, as they did in the 70s, but inflation accelerated. Why? Because they didn't increase interest rates sufficiently. So my view is very bearish about the system in the long run.
Okay.
But if you ask me, because I'm so bearish about the system, I'm not bearish about stocks, because when central banks print money, stocks go up. Gold goes up.
Gold hasn't had it. Yes, it's hit the 2000. It's pulled back. It's gone, and from a longer position, it's held its purchasing power. It's done what gold always does, which is it's kept your purchasing power. But a lot of people, Mark, have been turning around and saying, "Oh, why isn't gold a little bit stronger given all the challenges around the world?" I'd be interested to know, because I know that you like to purchase gold every couple of weeks, whether the price is up or down. Am I correct?
Every month.
Every month, regardless. So you just that's your way of keeping purchasing power. So you see gold as a good store of wealth.
Well, I'm sure there are better ways to make money than in gold. But, you know, let's say I'm from Switzerland.
Yep.
So I grew up in the 50s in Switzerland. And I know the price of everything in the 50s, because in my family at that time, we didn't have a lot of money. And I know the price today. And then I know the price of gold. Gold was at $35 an ounce.
Yeah.
Okay.
Yeah.
Now gold is 2,000. So it's up, say, 30 times, whatever. In Switzerland, let's say a croissant or a hamburger or things like this, you know, what the common man eats, or a bratwurst, sausage, grilled sausage,
Real sausage.
Is up in price maybe 5 to 10 times.
Wow. Okay.
Now, some buildings are up more than 10 times, but I own a building in Switzerland. My building hasn't gone up more than 10 times.
Interesting.
So for me, gold today at 2,000 and it was at 35, for me, is a good investment. And then in 2015, gold had reached $1,921 in 2011. Okay,
That's
so
exactly
afterwards
right.
it
Yep.
went down to 1,000
Yep.
in 2015.
Yep.
So 2015 and today, we bought gold at 1,000 and now it's 2,000. It's not so bad.
Not so bad.
It's not as good as Nvidia and Microsoft and Apple,
Yeah.
but it is better than most stock markets in the world.
Can I ask you briefly? You mentioned two things earlier in this conversation. One was coal has done very well in the markets, coal stocks. And you also mentioned uranium. Now, the uranium market seems to be turning a corner. Now, here in Australia, we have a lot of uranium, but we don't have nuclear energy because the governments don't want us to have that, even though it's right here at zero carbon emission. Have you got a view on we'll come back to coal, but a view on uranium? Do you think that that's an area, a commodity that you like, or you don't follow that?
Yes, I like it, but as you said, the price is up. But if you ask me my view about uranium, then you also have to ask me my view about the governments. That is now the proof of the stupidity and irrationality of government officials,
Absolutely.
of the bureaucrats.
Mm-hmm.
What would be the cheapest source of energy? They don't want.
Why?
They don't want.
Why?
Ask the green communists.
Because
they don't want.
You're right. It's zero carbon.
The green communists want to go to conferences and give long speeches about global warming and all the nonsense. They don't want simple solutions.
Yeah, and it is a simple solution. But do you think that there will come a time when sanity prevails?
Well, in China, it prevails.
Yes, true.
That's why the whole world hates China, because there are some people that have still some sanity and common sense.
In a communist regime.
It's no longer communist. That is what the West says, to confuse people.
Okay.
China is not a democracy in the Western sense, but it is a democracy within the Communist Party. In other words, a democracy among elites. Like in the 19th century in Britain, only very few people could vote, only the ones that were paying taxes, and women could not vote.
No. Thanks for bringing that one up.
Yes.
With a smile.
But in China, in the Communist Party, if you're a woman, you can vote.
There you go.
So they're very progressive.
We're running out of time, and I really do appreciate your time, Dr. Faber. But who do you think will be the winners and losers going forward?
Well, it changes very quickly.
Okay.
You see, a few weeks ago, Treasury bonds became incredibly oversold, and sentiment was universally bearish. The hedge funds still have large short positions. And so within a month, treasuries have rallied 12%.
Wow.
Yes, for bonds is a big move in just less than a month.
Wow.
And my long-term view is I don't trust the US dollar. I think this is a very vulnerable currency. And we don't have time to go into the details. But in my view, it's a very vulnerable currency. That's why I hold precious metals. Now, someone from Generation C will come and say, Mark, I hold Bitcoins. That's good for you. I can understand that you hold Bitcoins. I think Bitcoins has huge disadvantages, but it has also some advantages.
Right.
But it relies on the functionality of the internet and of electricity
Yep.
and of the legislator, because someone could come and says it's not legal.
Yeah.
But they can do that with gold also. They can take our gold away.
Mm-hmm.
I mean, if the governments, think about it. When we went to school, everybody always tells us, oh, democracy is the best because it means freedom. Nonsense. We have now the proof that the democratically elected governments, for the first time in history, locked in the entire population. And interestingly enough, the freedom-loving Australians, they have the worst government, along with the Canadians. The two countries that always pride themselves
on freedom,
and individuality.
Yeah. And we are.
And the worst thing is that Australians couldn't even go and buy beer. It was a national disaster.
Well, down in Victoria, of course, they're changing the tax regime. If you own property in Victoria, the land taxes are going up. They're taxing those that have got more than one property, and there's a bit of an outcry, but people are moving away from Victoria from an investment point of view. So other states are seeing it and thinking, oh, maybe we need to back off.
I think the most important in life is to pay as little tax as possible.
What a wonderful statement. And I agree, because they don't spend it very well, that we should be giving them too much more.
They spend it horribly.
What would be your final comment to our beautiful audience out there on making money matter? Because it's a great title. How do we make our money matter? How do we protect it? Marc?
I still maintain that not to lose money is very important.
Yeah.
About 3 or 4 years ago, I opened an account with another private bank in Singapore. And then he said, well, what is your return expectation? I said 4 or 5% per annum. They looked at me with big eyes and said, like if I was crazy that I only had 4 or 5% return expectations.
Yeah.
But now in the bank, they all look at me like a genius because I didn't lose any money.
Right.
I didn't make much money. I made 4% per annum. But this is all I need.
Yeah.
If you live up to 100, like Kissinger, and you earn 4% and you're born with $1,000, I can tell you, you'll die very rich.
Oh.
Because of the compounding effect.
Of course.
Huge. Very few people on all their assets will earn 4% per annum.
Wow.
Half the people will lose half their money through divorces.
That's why I'm single.
Yeah, this is the truth. And
do.
The other half through a stock market crash.
Do you see a stock market crash coming next year?
I think in the current environment of money printing, and as I said, money hasn't become tight. And the central banks will print money. What is much more likely to happen is a collapse in the purchasing power of money. In other words, that your wealth is eroded by inflation exceeding your capital gains, by inflation exceeding your wage increase.
So it's the collapse in the purchasing power of your money. So
correct.
Go to real assets because of inflation.
Correct.
What a great way to finish this conversation, Dr. Marc Faber. Fantastic. I really appreciate your time. And as I said right at the beginning, ladies and gentlemen, he is the editor and publisher of the Gloom, Boom and Doom Report. You can go to gloomboomdoom.com. Check out all of his research, all of what he does for everybody around the world. But for you, our subscribers, I hope you enjoyed this conversation, and we'll have Marc back again in 2024. But Marc, if I don't speak to you before, Merry Christmas up in Thailand, which is where I was born.
Yes. And I wish you and your viewers a booming Christmas.
Thank you so much, sir.
Okay. Bye-bye.